Dear colleagues, I welcome you at the Central Bank. Today, the Board of Central Bank decided to reduce the refinancing rate, setting at 6.75%. Mr. Galstyan will submit the rationale of this decision, followed by Q&A. So shall we? Today the board of the central bank at its meeting decided to decrease the key policy rate, setting it at 6.75%. At its session of February 4, 2025, we reduced the refinancing rate by a quarter of a percentage point, setting it at 6.75%. The board agrees that a lower refinancing rate is necessary to continue to meet its price stability objective of ensuring an inflation rate of 3% over the medium rate term. Annual CPI inflation has continued to remain below the target at 1.5% in December 2024. Core inflation has also remained at low levels at 1% year-over-year in December. In Q1 25, risks of slowing economic growth globally in the key trading partner currencies of Armenia continue to persist. Inflation in partner countries has moderately expanded, while the prices of goods and services characterized by sticky prices in key trading partner economies continue to remain significantly above target level. Growing tensions in international trade relations continue to create risks for future growth in commodity prices and potential disruptions in global supply chains. At the same time, labor market conditions in key trading partner countries, particularly in the United States, remain tight. In this context, advanced economy central banks would be expected to continue to gradually ease policy rates at a slower pace while maintaining a relatively tight stance monetary. Consequently, the external environment would be expected to transmit weak inflationary pressures on the Armenian economy. In Q4 2024, economic activity in Armenia will continue to approach its stable long-term levels. Growth in economic activity has largely been driven by services, construction, and trade. These dynamics continue to be impacted by certain short-term factors, significant uncertainty with respect to the sustainability of economic growth and its long-term outlook, as well as the future trajectory of domestic demand conditions. Uncertainty has increased regarding the direction and magnitude of potential impact of fiscal policy on demand. Labor market conditions continue to cool amid these conditions, as reflected in stabilizing wage growth, non-traded sticky price inflation, and inflationary expectations. In order to manage possible risks stemming from conditions of high uncertainty, the board considers multiple scenarios during its deliberations. On the one hand, the board discussed scenarios where possible underlying developments would require a higher path for the policy rate relative to current market expectations. This case A-type scenarios include uncertainty about possible expansion of the inflationary environment in global economy. This development required a tighter policy response compared to market expectations in order to ensure price stability. On the other hand, the board discussed case B-type scenarios, including those related to the gradual slowdown of economic growth, weakening demand, and the risks associated with the prolonged maintenance of a low inflation environment. This would imply a more rapid and aggressive downward path for the policy rate than what is currently priced in markets, in order to sustainably stabilize inflation at the target in the medium-term horizon. As a result, seeking to minimize the losses that could stem from these and other scenarios, the balancing and aforementioned risks, the board finds it appropriate to continue to gradually ease the policy stance. The board resolutely affirms its commitment to adopting the appropriate policy actions and strategies to ensure the price stability objective of 3% inflation in the medium term. Thank you for your attention. Questions are welcome. Sputnik. Thank you, Mr. Galstyan. About urban public transportation, have you changed your assessment of its possible impact on inflation and raised prices, considering that the actual rates have also changed? Thank you for the question. In order to speak up to the point, our public transportation weight in the consumer basket is 0.4%. 0.23 out of this 0.4 is accounted for by Yerevan. And if we look at the extreme scenario of 150 dram per trip without the packages, that is 50% raised prices, this will have 0.1% of an impact on CPI. In reality, it would be even lower, considering that this is not the case. It's 0.1 at our assessment at this point in time, slightly over. This 0.1% is in the hypothetical cases if everyone takes a single trip. It's the maximum possible increase. H2 TV station. Mr. Galstyan, the newly elected President of the United States, has signed several executive decrees halting external freezing by 90 days external funding. What's, in your opinion, the possible impact on Armenia, the civil society sector, and U.S. finance? Numerous projects do exist that are panicked in particular. Frankly speaking, it would be difficult to answer your questions at this point. I'm not aware of the scale of those programs and projects. I assume you're referring to the USAID. USAID operations have been suspended for 90 days, but frankly speaking, I have no information about the volume of their operations in Armenia, the number of people involved, the type of activity they are involved in, so it will be difficult for me to answer. Arka. Thank you. Picking up with the U.S. subject, the new authorities there wage customs war with neighboring countries. It's not impossible that this customs war will expand over other countries. Have you factored in this environment in the inflation processes? Will you continue to reduce the refinancing rate considering this customs situation? The decision that we're taking is based on a comprehensive analysis that is not focusing on just a single factor. The factor you referred to, however important, is not the only one. When we're speaking about A-type scenarios, I mentioned that trade wars are possible. As a result of these trade wars, there may be a higher inflation rate. As a result, their neutral rate may increase. We focus on that, our attention, but at the same time, on day one when we started these discussions, the slant was on 25% tariff on Canada and Mexico imports, and Canada and Mexico naturally said they will mirror the actions of the United States. Last night there was news that President Trump has spoken both to Prime Minister Trudeau and President of Mexico and decided that at this point in time they will defer this issue for at least 1 month, focusing on the protection of borders. The Mexicans, according to my information, have committed to deploy 10,000 more police force or even the armed forces alongside the border. The Canadians have taken a similar decision to pump up the border controls. Let's see how it goes. All analysts concur that this will not be a one-time event. It will take, this is just the preamble of long and winding negotiations as to what will follow and what actions the countries will take against each other. There is news already that there will be new approaches to the trade with EU, and if I'm not mistaken, a similar rate was applied to China. EU and China are more relevant for Armenia. We'll live to see. I wouldn't like at this point to make judgments. As soon as we receive information, we analyze and incorporate it in our decision making. Public TV. Mr. Galstyan, the banking system in 24 over 23 generated huge returns. What is the rationale of these huge returns, and what it will be steered for? Will it be invested in the economy? And if yes, what terms and conditions? And the second traditional question, after reducing the refinancing rate, will this affect the interest rates of the banking loans? With your permission, I'll start with the second question. When we were looking in our pre-session at the information we have access to, it became obvious that there is a clean linkage between the refinancing rate and the short-term curve of the T-bills. That is a clear correlation. This curve goes down. In the long term, it will be a milder reduction of the curve. Investors at this point, however, the central bank keeps the rate low. In the long term, they are acquiring our T-bills at higher prices, which guides all other financial products. Another phenomenon that we're dealing with is the huge demand for loans. Businesses and households have a great demand, which precludes the significant adjustment of the interest rates. But today, when we're looking at the weights and relations, coefficients in the lending portfolios, we see that there is mortgage and consumer loans significant increase, especially in December. It's on the background of the significant growth that the interest rate stayed stable. The weight there of the volume of the higher interest rate products has increased, and if the total interest rate remains the same, the hypothesis is that it should have been offset by the interest rates in the business loans. Our colleagues have performed an analysis which will keep on improving. We've attempted, in order to be more accurate in our judgments, to look at the companies which both in the preceding and the year before that have taken out business loans, and to see what transpires with the interest rates on those loans, to compare apples with apples. If I'm not mistaken, more than 700 companies or business loans that are answering those parameters. In most of them, we see that there are loans in which the interest has increased, but there is a significant proportion where the interest has decreased. If we look at the basic directions broken down by the biggest banks that lend the most in business loans, the companies that, let's assume, have taken at X percentage, 12 to 13, they're now taking it at a 1% lower, their business loans. So in processing industry, there is a certain decline in the borrowing rates. But the demand in consumer and mortgage is so big that the total interest remains quite high. As for the record returns, they have grown, which cannot fail but make us satisfied. Those profits will partially be steered to financing the economy. As along which dimensions, time will show. Each bank will determine it according to its own policy. But the increase that we have observed in business lending has increased by 20% over last year, which allows us to maintain an economic level activity that we expect for 2025. Thank you. A follow-up question. The mortgage demand increased in 25. In December, it increased a lot. We assume that this, among others, is determined by the exit graduation of that program from Yerevan, out of Yerevan. Those who wanted to buy those apartments just tried to make it by the deadline, taking advantage of that program. So in December there was a great increase. Do we assume that this growth will slow this year because that program is no longer available? I do not want to make predictions. We'll even see. We meet with you 8 times a year, so we'll keep tracking it together to see which way those developments go. About inflation, Eurasian Economic Union was the lowest in Armenia. There are several factors when at the background of high inflation we reverted to sharp interventions in 22-23 determined by the external demand. There was 8% unprecedented rise in inflation. We acutely raised the refinancing rate as opposed to other countries. In December 2020 was the first stage of increasing the interest rate in order to fight COVID. Our policy, I think, is quite productive and has proven its efficiency without having, as other countries, any ancillary issues. There are some countries, for example, where the government has tremendous expenditures and the toolkit of the central bank is not sufficient or makes it more difficult to fight inflation. Thankfully, we have both monetary and fiscal policy certainty, and this allows us to keep the inflation in a manageable rate. We have 1.5%. The target is 3 this year. We'll approach it from the downside. Picking up the interest rate subject, don't you think that something strange comes about? When the rate increases, the banks increase their rates. When it goes down, the bank says there is a lot of demand, that's why we keep it high. So eventually, regardless of the central bank refinancing rate, for businesses and for consumers, the money remains expensive. Maybe the central bank should take certain actions for the end interest to also go down. It's paradoxical. The refinancing rate does not affect the access to money. There may be quite a few such paradoxes, but let's say in the United States, when the Federal Reserve System reduces the rate and the returns on the T-bills and the mortgages goes up, that's the same paradox. There is no administrative leverage against this. Fighting, restricting interest rate will wreak more havoc in the economy. We do not have a banking system with monopolization emerging. We have a freely operating competitive banking system, and naturally we see that there is an impact on the short-term T-bill segment. In the long term, the impact is weaker. This is determined by the overall environment and risks that exist in the economy. There is geopolitical risks, there is uncertainty risks, which essentially, when people price their product, they arrive at interest which may seem high, but that's the reality as we have it. We cannot use administrative leverage to coerce these people not to factor in those risks in their pricing. Do not do reasonable risk management, do charity instead. We see, as we mentioned, the business loans interest rates somewhat decreased, which is important. From the consumer lending perspective, perhaps this is not, they're not as important for the health of the economy and investments as much as the business component is. Consumer loans is what we will now say the interest rate is 6 3/4. The person calls the bank and they tell him we start with 20%. A question arises, where did this 14% go? The 14% is determined by the risk profile of the individual. So you enter the bank's websites and the de facto real rate starts with 20% irrespective of your credit history. So questions arise as well as complaints. I'm not aware of what the origin of those complaints is, but if the bank can loan the government at 10%. That is buy T-bills at 10%, which is zero risk. For an individual profile, it may be 20, 25, 15, or 50. There are consumer loans that essentially are issued at lower rates that you just mentioned, or aren't they? Mostly they exist, or mostly don't exist? I've looked at the market. There are a couple of products that are offered at 16, 17%, which is also high, considering that you mentioned they can fund the government at 10%. So the difference between the state and an individual could be 7 or more percent. Well, if the competition arrives at a stage when the bank decides that they could finance natural persons at the same interest, that would be up to them. H2. Mr. Galstyan, with your permission, when we talk about the interest being high or low, essentially natural and legal persons are financed. You should look at the data of 24. At this point, the consumer loans have increased by about 30%. This means, given those same interest rates, the demand for consumer lending has increased by 30%, and they've been given out. So if we look at this issue in context, whether this 20% interest is high or low, you should look in concurrent whether there's a demand for it or not. Let's assume, hypothetically, had it been 12%, the demand would have been 50, 60%. Whether that's good or not, high or low, should be looked and discussed in the total monetary policy context. So the question you refer to should be looked at in a more broader context. Our activities of reducing the refinancing rate is looking at the entire landscape. Let's say, had the lending decreased or had been stable or very low, which would have impeded with the galvanization of the economy, or our actions would have been more in tune with B-type scenarios. So this is a big positive environment of the demand as well. The consumers have no choice. That's why they take out these loans. When I go to the bank, they just tell me upfront 20%. Every bank tells us. So you have no choice, basically, no alternative, because you need that. You take it not because 20% is normal, but because you have no alternative. Many people take out those loans from various financial institutions at even 40 and 50%. So this question keeps remaining on the agenda. Why is it low? And people want to understand how can it be reduced. H2. You mentioned that you have no estimates about the no estimates, information. That's beyond our remit. As to how much the CSOs or the USAID invests, we have no information about that. But the USA was also assisted the forcefully expelled population from Artsakh, and in their resettlement and support to them has changed some X factors in those areas. In your opinion, the cessation of that funding, could it have any impact? Frankly, I cannot answer your question. You insist that the United States of America are helping Artsakh Armenians, which is appropriate, targeted, and is beneficial. Do I understand you right? Is it what you claim? What the Americans were doing was good, and if they don't do it, will that be a problem? I do not know. I cannot answer because I'm not aware of the scale of that intervention and the scale of refraining from it. At this point, we're not talking termination of projects. To the best of my knowledge, it's suspension. I'm not aware of what suspension in legal terms means. We'll look, observe, and see and respond respectively. Thank you. About the USA President Trump's statement was made a couple of days ago, when he rescinded his previous demands and said that the Fed is right to keep the interest rate at the mark and it's desirable for it to stay there. How could that affect external demand? May it weaken because the expectations about the US rate will be higher, therefore there will be lower demand for Armenian assets. I believe that there is fighting against market mechanisms is a futile endeavor. My example, when the American Fed reduced the rate but the American tea deals rose in their profitability, comes to say that that type of investment risk was assessed by the market higher than what our colleagues did. As for actions by President Trump, I believe that the independence of the Federal Reserve System is a very important factor. Monetary policy decisions are in the remit of the Federal Reserve systems. The risks, the potential or possible risks of trade wars and other types of developments, which is what President Trump kept talking a lot during his campaign, and by assessment of all specialists, his policies contained inflationary risks. Everyone converged on the idea that, determined by two phenomena, the future developments and current situation. In America, the inflation is above target and sticky prices are high. Considering those two phenomena, the specialists believe that reducing the interest by the amount predicted in the past by the Federal Reserve will not happen, which will result in a situation that the risk-free global interest in the world will be higher, with every consequence for all of us. Whether our prices will be adjusted, there is some happy news. We looked at our risk premium, and in the light, on the positive background of the last developments in the Middle East, our risk premium was reduced by about 50 base points, and that was also factored into our decision. We see that the Armenian Eurobond yield has gone slightly down. What will happen in the future we'll see, hard to predict, but naturally investments will take compensation, insist on compensation for the risks that they have assumed in acquiring those assets. About external demand, Russian Statistics Bureau published data about construction volumes in Russia. In December, there was a decrease by 20%. On annual, it's 2% reduction of construction volumes. Have you factored that risk for the sort of first month of 2025? And you previously had mentioned many times that the central bank is considering making a survey about labor migrants while they're at home in the beginning of 25. Will you carry it out or not yet? We've already done that questionnaire survey. The results have not been consolidated yet. Presumably by our next meeting we'll have the findings. As for the certain weakening of economic processes in Russia, there could be several factors affecting it. One is the high interest by the central bank, that is of the lending. Our colleagues, when they refer to high rates, the businesses are funded at 30+% in Russia. From this perspective, this 30% is significant expense for those businesses, whereas the average business interest rate in Armenia is 12%. Therefore, there could be business projects whose funding at 30% would be inexpedient. Some of those will be in construction. The second component that may have a significant impact is, I'll switch to Russian, is the concessionary mortgages that are phased out of the market. In this context, I believe that there will be some slowing down of the construction here as well. The overall slight reduction of economic growth over 25, of course, has been factored into our rationale. Our two economies are significantly linked, although we have labor migrants whose remittances have significantly reduced, and the dependence of Armenian economy has weakened on that factor significantly, but we're tracking those developments, and in our assessment of the external demand, this will of course be present. Do you theoretically project that this workforce may be integrated in the Armenian labor market quite rapidly, or maybe slower? Or do you believe that such an influx may happen? For several years, since there is a construction boom in Armenia, we've been observing for several years already that some labor migrants that were never even considering getting employed in Armenia at this point do work in Armenia. This is contributed to by, according to our estimates, the narrowing of the gap between the wages. In the past, you worked in construction in Armenia at X wages, and it was several times X in Russia, whereas currently this schism has significantly decreased by significant deflation of the Russian ruble and some other factors. Since the findings are not yet published, could you give us a sneak preview? What were the questions in the questionnaire? Haik may or may not answer that. Predominantly the questions were standard questions. We regularly hold those surveys about the motivation and other factors, and more recently with an emphasis on the remittances, what systems they use for remittances and how, whether it was cash, which percentage was cash transfers or brought back manually. That was most of the emphasis in the recent survey that was of our concern. The major 1,000 taxpayers list made it clear that the conventionally Russian ICT companies, also the branches of Western IT companies that moved from Russia to Armenia, this group of companies' revenues and taxes have significantly reduced. Do you view this as a possible risk of reduced demand in our economy? In reality, we've been talking about this for quite a long time, that the external demand has slowed down. Not to the extent of qualifying it as risks, it would be premature. We're dealing with a phenomenon which started from a huge level of demand that we had a problem with managing in 2023. In 24, we mostly looked at adjustment thereof. We mentioned that the economy is approaching its normal potential of growth. What happened before that was more determined by the Uber demand increase. So I would not qualify it as risks, but a natural adjustment to the natural level where it should be. In this respect, the same entities are operating the same environment, are affected by the same economic factors, are guided by the same demand and the same trends. Let me fill in. Our statistics committee have reviewed the statistics data, mostly about the IT. So it was not only the 8 that mattered, but they also increased the output. And secondly, in aggregate numbers, in the course of the year, we had the situation leading to concerns that about the outflow of citizens involved in the foreign IT. At 19,000, it seemed to stabilize, and within the last months, there is certain growth. In this respect, it would be interesting to compare the number of these ICC workers with the tax revenue. One needs to understand whether certain companies started to take advantage of tax concessions, which is why we need to do some micro-analysis to link those two factors. The registered workers in that sector is what I referred to. Early 24, Ameria Bank was sold. HSBC end of the year was sold. Are any new such sales planned for 25? If you are aware, we're not aware at this point. The central bank has not received any applications or package of documents with that purpose of acquisitions. None so far. And with your permission, mille pardon. Last week, or in one of the board meetings before that, we looked at the Archin Bank being dissolved, took a decision. The language may have resulted in some divergent. This is the Archin Bank that has not existed since 2003, so the court has ruled that it should be terminated. The board responded to the court ruling. It has nothing to do with the Archin Invest Bank that currently is operational in the system. And the second question pertains to crypto assets and electronic assets and crypto currencies. If I'm not mistaken, beginning with 23, legislation is drafted to regulate the area. Where do we stand at this point? Are you going to enact it in 25? We have finalized the draft in April 24. Following that, as far as I remember, there were 3 discussions with the industry representatives. There were hearings at the National Assembly, in the cabinet. The last one was early this year. There is a clear mood to proceed with this draft. Very shortly, the draft will be submitted to the Council of Ministers. Once approved by the cabinet, it will be forwarded for the deliberations of the National Assembly to be voted. If I'm not mistaken, we are leaned towards MICE standards, which means that transactions up to 1,000 euros will not require KYC. Will this be replicated by our law? It's not only MiCA, but also FATF standards. We will take this decision, whether it will be a threshold of 1,000 or whether it will be or not. We will be guided by, first and foremost, by FATF standards, and there is a lot of regulation required there, which creates the room for operation by good faith players. Mr. Galstyan, could you clarify the dynamics of deposits and loans? Apparently, both lending and deposits grows ahead of the growth of economy. What's the possible explanation? So both the savings increase faster than the economy, and the consumption lending in trade and services. What is the possible explanation for that? Part of it, I believe, is limiting it to the Armenian economy. When you look at the increase of deposits, would be far-fetched. There are non-residents, there are people who are just being integrated into our Armenian economy, and there is a certain influx of means into Armenia. So this is not only the result of generated by the Armenian GDP. As for loans, we believe there is a certain business component. The businesses increase their portfolio. They have certain expectations, I assume, about expanding their business projects. And the mortgage lending, you know better than I do what's the factors determining it. As for consumer lending, we have several hypotheses. In one hypothesis, the growth of mortgage loans will be naturally followed by the next stage, increase in consumer loans. the apartments that have been bought have to be furnished, repaired, equipped. So we believe we still have room for natural development during the financial stability session. The most recent one we spoke about. We preserved the anti-cyclical buffer at the same level, 175 base points buffer we already have accumulated. And there again, we are alert and follow the developments to see what's transpired in the financial market. The global phenomenon that we experience is as follows. And this is something good that we're doing, I believe. And here's what I refer to. There is a cyclical component in the economy which is at a certain slowdown rate. We're getting back to our level of potential growth. And the cyclical component, in order to add some positive signals to the cyclical component, we reduce the monetary refinancing rate. The second is issues pertaining to the stability of the financial sector, and over years when we accumulated a lot of profit in the banking system, lots of needs have accumulated in the banking system. Through using our macroprudential toolkit, we reflect both on the buffers and try to address the risks that potentially may arise before the system. On the one hand, there may be an impression that we are doing two different things by two different hands, but that's the objective. We implement policy to have adequate monetary policy, but at the same time not to do it to the detriment of our policy. Could you clarify what could be the driver of lowering business loans interest? If the consumer and mortgage loans have a great demand, then for that, for the same resource, more people compete and businesses will have to take part in the same competition for the same pool. I think we'll find opportunity once we complete this review. We'll report it to you. But this morning when I looked, we're mostly talking about high-quality borrowers who have accumulated a reserve of trust in their dealings with the banks, and the banks, as a result of our lowering refinancing rate, have certain lowering of the prices. They try to treat their good customers to certain lower interest loans. There are cases when they have the same rate but offer cashbacks. So the weight of the good faith or trusted clients is so high that it affects the market? It's not high, but the mortgage and consumer loans increase faster in demand, which precludes for the overall rate going down. But we have quite a few cases when good faith trusted clients with a good history, business borrowers, for them business loan interests are going down. CapEx underperformance. In the last report, Q4, I noticed an observation which I may have perceived properly. You mentioned there are uncertainties in the impact of CapEx indicators, performance indicators on the overall economy. Not all CapEx has the same multiplier effect on the economy. You may make a capital expenditure which will have a multiple effect on the economy, like road construction or whatever, at the same time, or you can have a capital expense which essentially has no real anchorage in the economy. So it matters what type of capex we're talking about. If we're talking about a positive impulse on the economy, there should be expenditures that in their quality and amount do have an impact on the development of culture of standards in the country, doing quality work, a huge volume of involvement and access. In this respect, it is important for this type of expenditures to be higher in the share of the structure of capex. Is there a trend that made you make such an observation? We haven't seen a trend, but we have done analysis which led us to finding certain uncertainties, which is the term we used in the report. About pension funds, a draft bill was introduced to the National Assembly recently, which means they'll be able to invest in the statutory capital of Armenian enterprises. Will there be? The assumption is true that the business will take advantage of this and certain projects will be commenced as a result. We do hope for that. We create the prerequisites for the good faith businesses that may interest reputable international pension fund managers to invest in their shares, should not be bound by the scarcity of resources. So the ball is in the court of the businesses. If the business does its homework very well, goes through reputable audit, accumulates good ratings, in that case our pension funds will of course adequately invest in such businesses. We have created the opportunity, but it's not us to take advantage of it. It's the businesses who have to. Has any assessment been in the foundation of that draft? What are the volumes expected for our businesses to comply with? Do you see any movement in the businesses to go to reputable audits, get ratings? The state has projects trying to support that. If you go through certain procedures, some of the costs will be shared by the state. So ancillary opportunities are being offered for the businesses to navigate here. So let's conclude if there are no more questions. Thank you, everyone.